Joining me now from Beijing to tell us what we can expect is William Hess. He's the managing director of China Analytics. So, William, tell us what you're expecting for tomorrow's GDP number. We had 11.9% growth in the first quarter. What's it going to be in the second?
We expect the second quarter number to be a bit softer, reflecting the controls on credit growth finally taking effect. We're looking at something around 10.7, but really sliding in down towards the 10.2 to 10.5 range for the end of the year, full year 2010. So leading into the first half of 2011, we think that there's going to be some softness, mostly as a function of credit policy.
Right, so that's what's going to be driving the slowdown, because we know it's not exports. I mean, we're also seeing government stimulus wind down here as well, aren't we?
Well, part of the credit policy controls are to control investment activity by local financing platforms. And even though that's starting to bite, at the same time, the central government doesn't want to slam on the brakes too hard. So it's likely that we're going to see some stimulus in disguise, if you want to call it that, later this year. Maybe it'll take the form of a regional development initiative to build infrastructure in Western China. Maybe it'll be a new industrial policy. But in any case, what it adds up to is more aggregate demand to try to fill some of the gaps being created by controls on real estate and controls on credit overall.
So let me get this right. Instead of continuing on with its efforts to rein in growth, we may actually see it switch gears and add stimulus into the economy later on in the year.
Well, I think the extent of any stimulus that they add, in whatever form it takes, will be to stabilize growth and maybe to engineer more of a soft landing outcome rather than a really more of a harder landing that we saw during the end of the last cycle at the beginning of the decade. So they don't want to do too much too quickly. They're still remaining very cautious, and there is a lot of uncertainty globally, and they're not quite sure how that's going to feed back into the domestic economy during the second half of this year and into next year.
How about the Chinese consumer? How are they coping? How are they doing?
I think one thing to note about the surge in growth during 2009 is that income wasn't distributed very well. It was an investment-led, real estate-led market. And what that reflects is that the returns all go to the big industrial producers, not so much to households. So the household share of national income for 2009 is going to be probably at an all-time low, a recent low anyway. What that reflects is an income distribution problem, one that they're going to have to deal with. So although consumers have been consumer demand has been pretty buoyant so far, we expect it to come down because a lot of consumers have bought into stimulus programs to buy automobiles, buy white goods, buy durables with government subsidies behind them. Most of the people who are going to be in the market for a new washing machine have already bought it, or same goes for a new car or a new home. So I think consumers may sit back and wait and see what the effects on real estate prices are, and then reassess what their income prospects are for the rest of the year.
I suppose their portfolios aren't doing too well either. Tell us this, William, do you think that the rest of the world is going to feel this slowdown in China?
Well, the immediate feedback is certainly into commodity markets, where low import figures for a lot of raw materials have really caused a little bit of a sell-off for certain commodities. However, one thing to note is if you look at the Chinese inventory levels, a lot of producers have been drawing down inventories, and that may leave some room for, as prices fall for commodities, for producers to ramp up on their inventories into the second half of this year. So that may also help to stimulate some growth.
William Hess from China Analytics, thanks for joining us.